and welcome to Analyst Hangout. I am Perpetua Fasomi Peter. It's another Friday evening and I'm glad to have you join us today. I'm flanked by Charles. Yes, Charles Fakroha, a stockbroker and iBrandTV business analyst. Good to have you join us today.
Thank you. You know, it's always a pleasure.
Absolutely. And of course, we'll also be joined by Ambrose Omodion, the Chief Research Officer in Invest Data Consulting. And virtually, we are joined by Mukhtar Mohammed, the CEO of Finance with Mukhtar. Thanks for joining us today, Mukhtar. If you can hear me, Mukhtar, thank you for joining us. And we also have with us virtually Aruna Kibira Jimo, the MD CEO, Global View Capital Limited. Thanks for joining us today.
It is my pleasure.
All right, so later on the show, we'll be joined by Abdurrashid Momo, the head capital market at TRW Stockbrokers. Well, we'll begin with the stock market report. Well, Friday's trading activities on the Nigerian exchange sustained a week-long positive momentum on price appreciation of large-cap companies. And also, the all-expected Q3 GDP figure came, confirming a slow growth of 2.25%, extending the 3 consecutive quarters of decline since fourth quarter 2021. We'll take a break now. When we come back, we'll dive right in. Stay with us. Glad to know you're still with us. And right about now, we'll delve into the conversation about what happened during the week. I know you want to talk about the fact that we've had 5 straight days, even starting from last week, Friday. So I'll be starting with Ambrose Omodion, who is right here with us. Good to have you join us today.
Thanks for having me again, Perpetua.
Absolutely. So talk to us about the equities market this week. Yeah. Did you predict what we saw?
I will start from the technical angle of the market.
Okay.
I would say, in technical, what we call a terrestrial. You have that rest means you have a 3% gain, but this time we're seeing 5-star on the trading market, and at the time we're seeing a mixed macroeconomic data, and also we're seeing CBN increasing rate, and market just give deaf ear to all these factors. It tells you that there is something the market is doing, and that is why I tell you that in equity analysis, one thing is very important is that price and time is key. Why I mean key is that every asset price on it, whether bond, equity, whatever I call it, they have to move up and down. Then the timing where you're supposed to be, like the time frame of whether 6 months, 8 years, 100 years, is about time. Now we're seeing that equity market become more attractive because we've seen third quarter numbers as at end of October. And these numbers, as I said earlier, some have beat their 2021 full financial year performance at Q3. And why about 60 to 80% has almost covered what they did in full year. It tells you that this company has the capacity to pay you what they did in 2021. And prices have suffered decline from May to date. Before this recent rebound now, let's take that way. And that's it that most of the stocks are cheap, and that the dividend yield of this company are between 10 to 15, while the average market yield is between 6.5 and 7%. And if you look at the fixed income market that everybody wants to go because of low risk, we're having 14% for treasury bill for about 364 days. But in equity market now, the time frame is that between now and end of April, we are going to achieve that your 14% in dividend yield and capital appreciation. We saw what happened today. At the beginning of the market was dull, just because Nestle Nigeria lost 10% flat. But when HL came, it reversed the whole. That is that these high cap stores that pushed the market earlier from January to May are back again. On what? On the ground that the company's performance has also improved. That is that the big players that sit on the fence, the PFAs, the fund managers, for me, they're just sitting for it to support. Now they are saying that even the economic data are not putting the market into panic. They are going back to this market.
Don't you think it's too early to conclude?
No. Because let me tell you, we have seen the results since October, and they're waiting to see all this economic data before they jump to the market. That's why I say they are studying the numbers. Yeah. They are looking at it because they are the people that have the big money. But the small people like me has already taken position already. When they are coming, because they have seen that this company has the capacity to pay them good dividend, and they are long-term investors because they are managing portfolio for long term.
Yeah.
And that there are companies that have the capacity to take that long. For me, this is an opportunity for investors that are sitting on the fence to finally fall down to the market and start what play. If not, they will just sit there and sit while others are trying to the bank. For me, the market is my but like technically, the volume that is moving in this market is very, very small.
Very small.
That's my own concern.
Yeah.
But when I look outside our own market, I have to move for US. The same company was saying that market volume is small. Also, market volume is there. That means technically we are seeing a change in technical analysis. That means this volatility, investors should look at it that if you are looking at that volume before you take position, you will still be standing. For me, look at the companies you want to do. The thing that's very important here is, I said time and price, cycle and what momentum. If you got these four on you, are good to go. That's how I rest my case.
All right, thank you. Well, we're joined by Abdurrashid Momo. Abdurrashid, if you can hear me, thank you for joining us today.
Thank you very much. Can you hear me?
Oh, perfectly. We can hear you. Now, talk to us. In your opinion, what were the factors that shaped the activities in the market during this period? I mean, we've talked about the macroeconomic indices, the figures that came out between last week and now, and how that the market doesn't seem to care. Talk to us. What's happening?
Let me say a little story. Number one, the way the market operates, right? I always tell people that the market is a discounting factor. Anything that comes out now has already been discounted a long time ago. One is that when those financials came in, a lot within the economy wasn't really looking too great. We saw prices dropping across the board. But there's one thing you need to know. Even as a case study, if you go to a supermarket and you see a product that is cheap and you know it's on sales, you definitely go for it. It got to a time when everything on the market was just dropping.
Yeah.
And I know that with time, people will see value when it comes to the right time. They'll see a right price to actually key into these products, in quote, which is the market. Was it 2 weeks ago, like the algo I use, I normally look at price action, I look at wave analysis of stocks, their character and how they behave. And I knew that with time, the first sector that actually trigger the bull market was going to be the banking index. And fine, you have seen I would say they are actually within the levels predicted, within the 395 and 400. That's the NGX index, which encompasses the banks. Coupled with, when things start going up, you start seeing good news coming in. Nigerian Breweries came with a bonus and a dividend, so that one triggered another sector, which I think even Guinness joined.
If you can hear me, can you hear me? Do go ahead if you can hear me. All right, I guess we lost our connection there. Just before we go, you might continue from where he stopped.
Yes, I'm looking at what has what transpired during the week. Yes, there's a lot of excitement. Also, remember that the floor too has been open. People traded twice this week, and I was there, I think, on the Tuesday, and I saw that the market, everybody's excited. Yes, it's obvious that the market has a behavior, and that is reflecting the individual cycle. That is the psychology of the market. You can see, despite all the macroeconomic data, but of course, the investors are also looking at this data. They are there, but they've also seen some numbers. If you have seen Q3 and you have gotten, or it has shown that yes, what they did that last year or in Q3, they've already gotten it. Of course, it is obvious sign that every discerning investor should get into the market now. And of course, as usual, for the retail investors which were interested in more, yes, this is the time they should increase their presence in the market. So if you have been doing Naira cost averaging, you can increase your stake in the market so that you position yourself very well. Again, you also have to look at, of course, the fundamentals of the companies which you are investing. We've already established that. So people coming to the market now, for me, I think it's a very good opportunity.
All right, I think we'll have to end it there. Just before we go, very quickly, Albert, I want you to talk about the GDP. What will be the impact very quickly? The just released figure actually, in less than a minute.
No, actually, for me, it does reveal some sectors that still have strength. Because actually, the GDP is past data we're looking at already in Q4. But we just corroborated that there are some sectors that are supporting the economic growth. Despite it's a decline we're seeing. Because we can say now we're in recession, but we're already in contraction. Because if you are declining for almost 3 quarters, it's just because it's not in red. That's why we're not pronounced recession. But you are declining. So that something is happening. And there are 3 factors that really give an indication what is happening before you can see this decline. Look at our inflation is already high. interest rate is high and national output is declining. It tells you that we are already in contraction, either middle or early, but in contraction. That tells you that for an investor, there are some sectors that do well in this environment, and that sector is where you should also be putting your eyes. And not only that, if you look at the GDP itself, from the figure, so that the non-performing, non-oil sector could be about 4.70%, and that comprises about telecom, insurance, finance, and manufacturing sector. Why the oil sector is one that performed poorly? Agriculture sector supported the economy. That means for you as an investor, yes, because nothing has changed, that means that trend in those sectors will likely to continue. That means now we're already in Q4. Look at the banking sector, you can see what they are doing. Look at the agriculture sector. Look at the the manufacturing sector. Despite the inflation and also declining purchasing power, most of them are still doing, because there are some sectors that are able to pass the high cost to a consumer. For me, these are the sectors to look at. That's only open your eyes. If you don't know whether it's declining now, look at which sector has supported the growth, and that is where it should be as an investor.
All right. Thank you so much. And moving on now, the Monetary Policy Committee of the Central Bank of Nigeria, that's the CBN, in its last meeting for the year, voted to increase the benchmark interest rates, that's the MPR, by 100 basis points to 16.5%. This is the highest level since 2001. Now, during the meeting, the MPC considered that the further tightening stance will help restore investor sentiment while curbing the rising rate of inflation. I'd like to start with you, Charles. What does this mean for businesses, very quickly?
Well, we've said it here several times on this platform that you can't just control inflation or your economic issues by using just one angle. And the CBN, I would not blame the CBN governor. They have that authority to manage the economy using that monetary policy. And I'm not clear that the CBN governor and his team, they are hawkish. Inflation up, that's what they have, because they just look at it. Inflation is going high. I mean, inflation is up, rising. What do we need to tame it? Okay, let us also continue to increase rate. But of course, when you increase rate, there are other macroeconomic implications. Cost of fund will increase, and people were even thinking that yes, that has decreased. People will now leave the equities market and go to the fixed income. But what do we see in the market? Which shows that investors have come to term. Yes, they have factored in some of those inflationary trends, and they are saying, okay, well, let's just go for it. We've seen Q3 numbers for some of these companies, so why do we need to have any doubt? Let us go. And that's why we see increased interest in the stock market. Coming back to the inflation figures and the CBN increasing the rate, yes, I would say I'm also one of those analysts that did not believe that it was going to increase by 100 basis points.
I think you weren't even expecting any increase.
I wasn't expecting any increase. Looking at the flood situation, the food rise in food prices, energy,
and the Naira
redesigning and all that. But of course, like somebody have said, the CBN governor and his team, maybe in their wisdom, they decide that this is the best thing to do. We'll continue to support them, but I will advise investors that yes, the rates are up as the NPR. Again, it's still going to favor some sectors of the markets.
Absolutely, we'll come to that. Mr. Aruna, if you can hear me, do you see this as a necessary tool, to reverse the movement in the inflationary pressure? If you can hear me, Mr. Aruna.
Yeah, I can hear you loud and clear.
Okay.
I think it is because in elementary economics, we have been told that inflation is when there is too much money pursued few goods. And I believe that what CBN is actually trying to do with inflation at over 21% is try as much as possible to go the way of a contractionary monetary policy by dry liquidity in the system. It is believed, yes, like Charles has just said, that it will also have effect on other microeconomic indices. But I also believe that by the time it dry liquidity in the system, that there should be a check on inflation.
All right. Thank you. Well, but before we move on, Amukta, if you can hear me, please confirm if you can hear me.
Yeah, I can hear you now.
All right. I'd like you to look at the impact on the capital market now. Don't you think this will further affect the equities market? Or from what we've seen this week, do you think the equities market is probably immune? Talk to us.
Well, from what I've seen, I want to toe the line that Momo just said, because if you will allow me to use this analogy, when somebody knock at your door and you open the door and the person attempt to slap you, the slap will land quietly. But if it's attempting to slap you the second time, you are definitely going to dodge it. CBN has been increasing rates right from this year. I believe the market has actually been expecting this, and the moment this entered into the market, it was discounted. And you know, this CBN redesigning of Naira note that have pushed a lot of liquidity into the system, and the only way that they can go is investment, and I think the capital market is part of it. That was one of the effects that we have said. I don't think that the increase in NPR will further have another negative impact on the equities market.
All right. Thank you so much. Mukhtar, very quickly, Mukhtar, I'd like you to address this. How can investors and traders strategically take position in the equities market at this point in time? Mukhtar.
Thank you, Perpetua. I think at this point in time, you need to look at fundamentals. They are key. And like they all said, you need to look at fundamentals, and you need to look at value investment, and also look at what are you really looking for? What do you want to gain? What are your goals in coming to the equity market at this time? Are you for dividend? Are you for capital appreciation? Are you both for dividend and capital appreciation? If you make those plans, then you begin to look at those equities, especially like they say, when you look at their third quarter result, you begin to take position in those equities that you know will pay good dividend, and you could also benefit for capital appreciation. Then you look at equity that you think, oh man, the dividend might not be so fantastic, but I think capital appreciation is better for me. Yeah, and I think, and again, you have to really look at we got the report from Nigerian Stock Exchange that we have about 11 point something % of foreign investors in the market, and that seems to be the highest that we've ever had. And again, when you dig deeper, you realize that most of those foreign investors that are coming to the market now are most of them that we couldn't exit because of the two-way exchange system. They've not been able to get their fund out. So instead of keeping their fund lying fallow, they decided to come back to the equity market. So maybe you have to look at those companies these foreign investors are investing in also, because why we've not seen those long bullish runs in the market for this long was because foreign investors seem to be the one that make the bullish run longer, because they tend to stay for 6 months, 7 months, 8 months before they begin to think of their exit plan. But for institutional investors like the pension fund administrators, I think they are just there to see what will happen in the next 90 days, what will happen in the 180 days, because they are used to playing the fixed income space. And for retail investors, some retail investors have still not recovered from pre-losses. Maybe some of them are still afraid of the market, especially those that played the market for a long time. They are scared, so you don't see those. Also, once they see a capital appreciation, no matter how small, they just want to take profit and begin to look for a new entry point. I think you need to put all those factors together, and then you begin to invest depending on your strategy or what your goal are towards next year. Because now, apparently now you must be looking at next year, not really looking at what will happen within this quarter. And knowing that next year we have election, which sometimes the market during January and February, which is the peak of the market earning season, you begin to queue for liquidity, and sometimes there's a little bit depression in the market, especially during the election period prior results. But immediately those results comes out and the election is good, successful with no violence each side, even if they have to go to court, then you see the market respond appropriately with a little bit movement. But after that, the market will be looking for trigger in terms of what will the cabinet look like. So it's an opportunity time for investors. Like I said, depending on where you are, what are you looking at? If you're looking for capital appreciation, dividend payment, or both, okay, it's just for you to know where you want to be.
All right, thank you so much. Well, moving on now, Debt Management Office, that's the DMO, on behalf of the federal government, recently, that is, of course, announced the offering of 100 billion naira Ijara Sukuk bonds for subscriptions. Now, according to a press statement released by the DMO, the bonds are offered at 15.64% per annum and will be due in 2032. The statement added that the bonds are offered at 1,000 naira per unit, Subscription to the 10-year tenured bonds will close on November 29, 2022. The Ijara Sukuk, like the FGN bonds and FGN savings bonds, constitutes part of the domestic component of government borrowings, and since it was introduced in 2017, it has provided 612 billion naira for the federal government, which has helped in funding 71 roads and 6 bridges, measuring 1,881 kilometers across the country. Now, to start with this, Mr. Abrina, if you can hear me, I'd like you to confirm that, please.
Yeah, I can hear you.
Talk to us. What do you make of this offer?
Well, I believe it's geared towards the right direction, because if you actually understand what Sukuk is, an ethical-based debt instrument that is geared toward a project, and what this is all about is going to enable the government at least to provide the infrastructure that they could not provide for themselves. So I don't believe I have any issue. If it's a Sharia compliant program, I don't believe I have any feeling towards it, as far as it's help to develop infrastructure across the country. Look at the number of roads and the number of bridges that they are about to build out of this. I think it's a very good thing.
All right, I'm looking at the rates now, because I mean we're all looking at rates, and we're trying to decide which instrument is better, which instrument to go for, and all of that. So it's in the light of that I'm asking you.
No, Sharia don't actually go for rates. Like I said, it's different from the traditional bond. Instead of the Sharia does not believe in usury. That is putting out your money and be expecting a return. The only thing they will give to you, you have a share of the profit from the project that which the Sukuk is tied to. So it's actually not, the only thing that yes, it might be based on maybe the coupon rate that is there, but you don't get coupon like the coupon you get on the traditional bonds. And another good thing about it is that I think it's tied to the project. The traditional bond, at the end of the day, when the bond matures, you get your principal plus your coupon. I believe in Sukuk, you'll be getting profit. They don't actually call it coupon, getting profit as far as the project is in existence.
All right, thank you so much. Abdul Rashid, if you can hear me, kindly confirm. Mr. Abdul Rashid, can you hear me? All right, well, I guess I'll take this to Mukhtar. Mukhtar, talk to us. What differentiates the Sukuk bond from every other bond, very quickly, in less than 2 minutes?
I think what they are paying, I think, look nice investors, especially when you look at the inflationary figure. Even if they are not paying up to the inflationary figure of 21.6%, but you are getting about 15.6%, which I think is fair, especially with the kind of investment climate we have, not only in Nigeria and globally. I think is good, but then I tell people jokingly, I think it's good if you are looking at preservation of wealth. You don't want to take any risks. I think that's the place to be. If you just want to be enjoying most of the money that you have made, either through the equity market or through other investment, I think you could also. But if you are looking at beating inflation, gaining more, I think the capital market still remains the best to be.
All right. Very quickly, Charles, let's have your thoughts before we end this session.
Yes, the Sukuk bond and any other bond. Yes, it's a good one from the DMO, and looking at what the Sukuk, I mean, you read your intro, what the Sukuk bond has done for the country. But again, I'm more interested in saying that the average investor should realize that the Sukuk bond is not only for Muslims. It is an investment asset. And as such, you are getting that return. You can say over 15%. For me, I think that is quite reasonable. Of course, an investor, you are not just going to have only fixed income in your portfolio. You are expected to diversify your portfolio. Yes, then again, the Sukuk bond follows all the principles of ethical investment. So that is also a very good one. And it's going to encourage financial inclusion for all those Muslims who don't believe in certain investment in the market. It shows that, yes, the Nigerian capital market is taking account of everybody. So that is very good. They should just, of course, with the principles of Islamic financing, they don't have any choice than to be ethical in terms of the funds they have collected. There's going to be a special purpose vehicle that will now use these funds. And of course, you can see In Islamic finance, you don't pay riba. They call it interest rate. But with this one now, you can see that it's a form of a rental.
Yes.
The special purpose vehicle is going to do the job, and whatever profits or rents, it's just like lease that they get, will now be sent to the various subscribers. So it's a very good way of getting financial inclusion. So I would just encourage the regulatory authorities, and of course even myself, stockbrokers, the analysts, and of course the media, to keep talking about it, create more awareness, so that both Muslims and non-Muslims will understand the benefit, the implication of this bond, and we'll see more and more people getting involved. And of course, it will be good for our economy, because at this time now, we need variety of products, innovative products to come to the market, so that investors will have choice to make. It is not just equity. Even in equity, we can also try and see how we can do some little financial engineering, the ETF, the mutual fund, and ensure that we capture everybody, every segment in the economy. And that is what the Capital Master Plan that was launched recently, that is what it entails to correct. That is the revised law, the revised plan that was relaunched, a 10-year plan, 2015, 2025.
Right.
And now we're talking of 2025 now to 2030. So it's good, it's the right direction, and we should begin to have that in our stockbroking firms, maybe a unit of Islamic finance.
All right, that's a good one. Well, we'll take a break now. When we return our attention to consumer goods companies' earnings. Stay with us.